Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. I'm Seth with Samuel Case and our host, Mark Manila. It's great to be here with you all. Mark, I'm excited for the show today, brother. Great to have you.
Of course. What a blessing it is to be able to do this, isn't it?
Awesome.
And they have 2 locations, and right now 2 locations. Who knows, in the future, maybe 3 or 4 that we broadcast from. It's not as nice as sitting next to you, Seth, and being able to just be there, but it's still exciting that we have multiple locations, just in case the enemy decides to shut one down or something.
Exactly.
Who knows? We could have protests outside the FISM studio there in Philadelphia. We're not going to tell them where it is in St. Louis.
Exactly. We're pretty close to Philadelphia, that wonderful, godly city of Philadelphia.
Yeah.
No,
it's right in the name, brotherly love,
exactly.
right?
Exactly.
That's right.
Well, folks, we got a great show.
Protests keep us on our toes.
They certainly do, exactly. And you know what? They keep a little metal in our spine, right? A little bit of strength.
There you go.
610-363-1110. Folks, we want to hear from you. 610-363-1110. It's very easy. Pick up the phone and call us right now. We want to hear you. If you've got questions for us, if you've got questions about what's going on in the world, in the markets, the economy, Mark is here to help you. Again, 610-363-1110. That's the best way to get your question answered. So do that right now if you're interested in joining the conversation. Guys, let's get it started here so we saw a couple of headlines come out late last night in the wee hours of this morning concerning rare earth materials. There's a couple things going on there, Sam, actually. Why don't you bring us up to speed on that, Sam?
Sure. Major U.S. steelmaker Cleveland-Cliffs is now looking to jumpstart rare earth production as President Trump aims to break free from China's absolute stranglehold on the market, causing the company's stock to jump 21% in the process, which is a pretty sweet deal. The announcement comes as President Trump also signed an $8.5 billion, that's billion with a B, rare earth deal with Australia just yesterday. Here he is.
We work together very much on rare earths, critical minerals, and lots of other things. And we've had a very good relationship. We've been working on that for quite a while. In about a year from now, we'll have so much critical mineral and rare earths that you won't know what to do with them. They'll be worth about $2.
$2. Let's hope he's right, because China has been tightening its grip on these critical resources, of which it controls an estimated 90% of the market, and these are very important for emerging technologies. In fact, China's rare earth magnet exports in particular dropped nearly 30% year over year in September.
It's interesting. Mark, I'll ask this at the top here. When we're talking about rare earth materials, what in the world does that mean, and what does it have to do with investing?
Well, rare earth materials are those materials we need to make all the critical electronics, some for actually our armaments and things like that. So, you know, it's not like iron or copper, which aren't rare, although sometimes it feels like it from the price of copper and stuff. But it's these minerals that are needed for these electronics, for making the microchips, making the different things that we need. And the magnets, of course, are used in everything that we have. And just ask Elon Musk about those, and he'll give you a good answer why that's so important. You know, to make everything we're doing going forward, it looks like requires rare earth minerals. And I'm looking for, I think it's a great idea that it's something we should have had in place 10, 20 years ago with Australia. And we probably did at one time. And then administrations that have come and gone ruined those deals. But we can't depend on any other country. The idea that Cleveland-Cliffs is going to start, is that what the name? Cleveland?
Yeah, U.S. steelmaker Cleveland-Cliffs. Yeah.
That they're going to start focusing on those rare materials instead of the iron ores and the things that they use for steel, which is a good idea because we do have them in the U.S. We just haven't pursued them as other countries have, as we had all the restrictions and the shutting down of all the mining activities for many years, you know, because we need to save the environment type of thing. What good saving the environment if it's all going to be burned up in one nuclear war because because we don't have the rare earths to protect ourselves. That's my thought, at least.
Or if China controls the whole world and they don't give a rat's behind about anything when it comes to the environment.
Yeah, right, exactly. They never had to. That's the problem. That's why I think it was this summer I heard that there's one electric coal plant going up a week in China. Now, I'm not sure if that's true or not, but I heard that on some opinion or op-ed that I read, and maybe it's not one a week, but obviously they don't care about the environment, and that should be all up to us, right? We should give up everything so China can continue to do their destruction of the world.
Well, Mark, according to AI, China permitted the equivalent of 2 new coal plants per week in 2022 and continue that pace in 2023. I'm not sure about this year or 2024, but yeah. 2 a week.
Isn't that incredible?
Holy moly.
And you know, I get it. Their economy growing, they need electricity, they need to do what they need to do, and hopefully they're pursuing use it, don't abuse it, where they're creating these coal plants that are using clean coal and not dirty coal, and they have the processing to scrub whatever exhaust there is from doing that, and that'd be great if they were kind of like we're doing in the U.S. But my thoughts are they're probably not.
Mark, with this rare earth stuff, tell us this. My mind obviously goes to the tech sector if you're thinking about microchips and things like that. But what other sectors do you suspect could be directly impacted by what's going on here?
Well, every sector, because every sector is affected by the tech sector. Automobiles are going to be affected by, and they have been already in the past, and the price of vehicles goes up as rare earths go up. Every sector, I can't see any, even farming. If you think about what's going on in the farming community and the technology that is being used today compared to 20 years ago. When you got harvesters out there on their own, doing it all on their own, it's all computer-driven machinery, So it's all satellite-driven. It's all these things. So aerospace, everything is affected by it. So yes, this is one of the things. If Trump doesn't go down for being the president of peace, I think he'll go down for saving our nation by getting back into the rare earth production, mining and production, and showing the world that we can do this.
Yeah, it's good stuff. Well, in other news in the markets, Mark and Sam, I found this rather fascinating. We saw this story yesterday. In spite of the alarms of a market pullback, I think we tend to forget that after the pullback, the markets really, at least historically, tend to roar back and more than make up the ground they lost. Sam, what can you tell us about this?
It's almost an understatement, Seth. So we're looking at the history of the S&P 500, where we see that bull markets not only last significantly longer than the bear market, so the good stuff lasts longer than the bad stuff, but those gains way more than make up for the losses. For example, in the 2008 crash, that lasted roughly a year and a half, had a pretty devastating 55% downturn, but that was then followed by an 11-year bull market and saw gains of nearly 500%. So that's a pretty good exchange there. All told, the average bear market has lasted about a year with losses of around 30%, while the average bull market, on the other hand, has lasted nearly 5.5 years with gains of 250%.
Yeah, Sam, we saw that chart on the screen for our radio audience. You can't see this, but it looks like, in the positive trend, so you go up and down, the positive trend, they're like mountains. And those, I assume, Sam, are the bull markets. And then the negative trend are much smaller in comparison. Mark, what do you make of this? Why is it that the bear markets tend to create, much more panic than the bull markets, even though the impact of the bull market seems much larger?
Well, let's look at it like this. Seth, let's say I come back up to Philadelphia for a month to do the show. Yeah. And
I would love that, by the way.
Every day for 29 days, I come in and the first thing I do is give you a hug. And then on the 30th day, I come in and I give you a gut punch, a real hard punch in the gut. And I mean, it doubles you over and you drop to the floor and you catch your breath finally. And which one are you going to remember more?
Well,
29 days of beautiful hugs or one day of punch in the gut?
I would definitely remember the gut punch, in part because I think my friends in the control room would be filming it at the time and probably post the footage on YouTube. So I would remember that one more.
Yeah, but the point is, it's the pain. It's driving down the road. We can go 40 miles on a road with a nice smooth drive, and then all of a sudden there's a couple of bumps or potholes, and we start thinking about, oh, what a terrible road. The same thing's true about our investments. When we look at our investments, we see a pullback, or we feel a pullback where, our portfolio's growing and growing, and we're 5 years into a really good growth streak, and then all of a sudden, boom, it drops a bit, and that's painful. So we remember the pain more than we remember the pleasure. That's the bottom line on it.
I appreciate that, Mark. Thank you. And thank you for not punching me in the gut when you saw me in Philadelphia this past week. It was wonderful. Hey, we got more financial issues coming up, folks. Maybe we'll continue this conversation on the other side of the break there. Join us, 610-363-1110. We'll be right back.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life, and some make life worthwhile. There are decisions to stay, or to go, to remain the same, or to grow. Sometimes we pray and make peace. Other times we take a stand for what we believe. In celebration, mourning, triumph, and defeat, we are invested in every decision we seek. Despite differences, we have one thing in common: the desire to do all for the glory of God. Keep your wallet aligned with your heart and your investments in harmony with your faith. Timothy Plan. Biblically responsible mutual funds, ETFs, and retirement plans. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at timothyplan.com. Read carefully before investing.
I started investing close to 30 years ago now. All that time, I had never heard anyone talk about setting up your portfolio in a way that glorifies God. When I first heard about it, I was listening to the radio, a show called Financial Issues. They were teaching people how to honor God with their money. I became a partner with Financial Issues, and it's been one of the best decisions I've made. Invest your money in a God-honoring way. Go to financialissues.org.
Preborn is making motherhood possible for thousands of moms across America.
I found out that I was pregnant. My family, they were like, no, you're not having this baby. I met Miss Linda. She offered to get me an ultrasound. That's where I very first heard the heartbeat. It was really a great thing that I was led to the choice to keep him.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Call up now, folks. 610-363-1110. We're here, Financial Issues, with your host, Mark Manila, as well as your co-hosts, myself, Seth Udinsky, and Samuel Case. It's wonderful to be here, guys. And Mark, I so appreciate your wisdom when we were talking about market volatility and things like that. I actually had a follow-up question for you, brother, if that's all right. When we're talking about market fears, there's one index that we tend to not mention as much when we do our daily market recap. We talk about the S&P 500, the Dow Jones, the NASDAQ. Occasionally we mention the Russell 2000. There's also the CBOE Volatility Index, known for short as the VIX. What is this, and should we pay much attention to it?
Well, the CBOE Volatility Index, often called the fear index, actually.
Yeah.
What it is, it's not a predictor. What it is, it's measuring what the options, because it's a Chicago Board of Options Exchange is what the CBOE stands for, I believe. And volatility, what it does is it's looking at the options that are being bought and sold on the exchange, primarily puts and calls. And what that does is when people get more fear in them, they will pay higher prices to, say, buy a put or sell a call on their stocks to preserve their assets. They're buying insurance is what the bottom line comes down to it. So they're showing more and more fear by the amount they'll pay for those contracts. And that translates into the VIX. And the higher the VIX, the more fear the more fear or volatility that they're expecting in the market, to see in the market. So when people are really concerned about the stock market, about the broad market or in general, what they'll do, some traders will be buying and selling options to protect their portfolio. And based on the price that they'll pay on that, that is primarily what the VIX stands for. And if you look at it, it kind of goes just the opposite of what the S&P does. And so it is not really a predictor, even though what they're looking at is the possibility of what the volatility will be over the next 12 months.
It's more of a thermometer than a forecast.
Yeah, so it's showing the fear in the market and whatnot that is going on. Below 20, most people say that's kind of normal between, 15 and 20. Below 15, it's kind of placid and people are getting too relaxed. So we'll probably see something happen there. But when the higher it gets, the more fear there is in the market. That's the bottom line on that. Is it good to look at? Absolutely. Should you look at it? Probably so, just to see what's going on the options market. There are some investment firms and investment professionals that really believe that options are the way to tell what the markets are doing and not going to do and use it as a crystal ball and all sorts of stuff. I look at it. I don't have any fear from it. It's just showing how wide are we expected the volatility to be. So the swings could be up 20 or down 20, or could be up 40 or down 40 over. It just doesn't make really. You can see the same thing just following the S&P, but some people would say, well, this previews it just a little bit. I don't know. It's not a major indicator for me to use as a buy or sell signal. So I haven't used it as much as probably some others would. But it's worth looking at just to see the general, sleep factor of the market.
Yeah. That's helpful. 610-363-1110. You can queue your call up right now, folks. If we're talking about something and you don't understand it, you need clarity, or if you just have a question that comes to mind about your portfolio, the markets, we would love to hear from you. 610-363-1110. Again, 610-363-1110. Mark, I do want to give a little promotion for you right now, brother. I know it's a promotion for the ministry as well, but folks, if you go to the Daily Caller's website, Mark has an op-ed that's on that website right now that's highlighting our Nvidia petition, and it really does an excellent job of connecting what's happening with Nvidia to really kind of the same godless movement that was behind the nonsense with Dylan Mulvaney and Bud Light several years ago. Mark, I'm actually really excited because tomorrow you're going to go on to Pilgrims Radio. Pilgrims Radio is a Christian radio network based out of the Carson City, Nevada area, and they broadcast over on the West Coast. I'm so excited to get to hear that conversation, brother. But could you speak to Mark one more time why we're doing this Nvidia petition and why everybody needs to sign this and get the word out?
Sure, because 1, we love children. 2, we love God. 3, we love adults. And 4, we don't want any of them to be deceived, mutilated, half their life wasted away on drugs or surgeries that cannot reverse the fact that God created them as a man or a woman. Bottom line on it, what we want is Nvidia to get back to making chips and stop trying to gaslight our society into believing something that isn't real, that is harmful to them, and that can affect their walk with God or their walk towards God. Bottom line, we're not asking them to pick up a crucifix and join us in the salvation of the world. We're just asking them to do what they promised they'd do when they opened their company and filed their IPO and decided to raise money from investors and get back to the things they promised to do, making chips and paying dividends and helping that stock rise. bottom line, instead of trying to force a few people who are on the board of directors, force their culture on the rest of the millions upon millions who are not only employees but partners in that company.
Amen. Folks,
and the rest of the world.
Yeah, absolutely.
Join us.
You can
Please
sign that petition.
Join us.
Yeah, do that right now. Financialissues.org. Financialissues.org. Just click that green bar at the top. I did put it in the chat as well for any of you who have not signed it. Do it right now and then email it out. Share it with your friends, your pastor, your small group, people that you know, family. We want everybody that we know to get eyes on this. And here's something important too, Mark. You don't need to be an investor to sign this thing. You don't need to be one. You don't even need to have invested in Nvidia to sign this thing.
Ever.
Yep.
No. We just want them to straighten up, that's all.
Exactly.
Bottom line.
So do that now, folks. That's exactly right. All right, Mark, we do have a few questions I think that we can get to here with the time we have left in this segment. This first one comes in from Daryl. He's 65. He says, "Hey, Mark, welcome to the family, brother." That's awesome. Daryl, appreciate that.
Yes, thank you, Daryl.
Daryl says, "I'm retired. I need some income. The recommendation for the financial sector in FISM asset allocation is 9%, but there are only 2 stocks that you guys are recommending right now, paying dividends above 4%. Is it okay to invest more than 3% in these 2 until another comes on the buy list that pays well, or should I just wait and keep the powder dry, as we like to say?" What would you have for Daryl here, Mark?
I think you encompassed it all in that question. So this answer for a simple question is going to be a little bit longer than you probably were expecting. Let's talk about keeping the powder dry. Right now, the markets do not have a clear direction. The VIX is kind of, as we talked about earlier, we're not showing a lot of fear in the market right now. I think it's around 18.5 or something like that. A little bit more than most people are comfortable with, but not really bad. But the markets are overbought, and we are seeing that some pullbacks in different areas, but we're also seeing some growth, like in small caps and stuff going on. So it's very confusing. It's like 7 rivers coming together all at the same place, and so it's turbulent and kind of crazy and stuff. So with that said, I don't see any reason not to keep some powder dry. I think that's an excellent idea. It wouldn't hurt to raise our cash minimums up, even up as high as 10% if you're comfortable with that. Not a big deal. But on the other hand, the markets could just continue forward when this all gets sorted out, when maybe a few slight pullbacks in some of the larger stocks that are causing all this turbulence get more real with their valuations and stuff. We might see another year or 2 of great markets, and we don't want to miss that. But having your powder dry doesn't mean sitting on it forever. It just means waiting till you find that one stock or so that is valued where you're comfortable with and that you could move in. You got a good entry point into it. We have a whole lot of stocks on the buy list in our Partners Hub that you could go into and take a look at. Even though they're not in the financial industry, in the income model, you still could use something like a REIT or one of the high dividend stocks or something like that as well. And because there's only 2 stocks in there, we normally with asset allocation, we say don't invest initially more than 3%, 2 to 3% depending on the allocation. So you only have 2 stocks to do 9%. You'd have to do 4.5 each. That's not way off base, so you could do that. Or what you could do is find another stock that is a decent dividend-paying stock or some sort of income-producing asset, and maybe by a couple of percent overweight that sector of your portfolio, or a combination of all. Maybe just if you find something you like, move 2 to 3% in there and then not worry about it, or maybe just move 1 or 2% into a couple of different other slices and put the rest in cash and let that grow until the turbulence is over. I'm hoping that I made sense out of all that, because right now we're at a unique time of turbulence in the market. It's nothing to be like we talked about with the VIX. This isn't a fear factor. This is just happens all the time as the markets are trying to figure out which way to go, ago, as all the investors are voting, and those votes are coming in at every possible angle to figure out where they want to be. So we'll see some direction here soon, I believe, one way or the other.
Yeah. And Mark, I'm sure there's a lot of people listening who might not be partners right now. So what they just heard might have piqued their interest a little bit. And I'll just say this, if you're one of those people, I'd invite you to become a partner today, folks. This is a great thing for you to do. You get Mark's insight consistently. Mark, it's a wonderful thing. $132 a year. You can't beat it. It's a pretty good deal when you think about the asset allocation models and the portfolio tracker and all the different things that we offer. Really, really important. And so you'll be able to understand questions like that. So consider doing that today. Financialissues.org.
Yeah, we'd like to see them join us.
Yeah. Absolutely. And, Mark, I would love to mention this also. One of our sponsors, today's show brought to you in part by our sponsors at Preborn. Preborn doing some great work in saving the lives of babies and bringing the gospel to mothers and fathers. I saw a great headline here that it looks like the state of Louisiana is now suing the FDA to overturn a Biden-era rule that allows women to obtain the abortion pill without an in-person doctor's visit. Can you imagine that, just getting your hands on an abortion pill? Something so dangerous, not only for the baby.
Any kid could do that.
Exactly. Anybody could do it. The state of Louisiana is doing a really good thing, and we want to see this lawsuit come to fruition, Mark, I think.
Absolutely.
It's just so important what Preborn is doing, not only in saving babies, but in protecting women from the horrible dangers of the abortion drug, physical dangers, as well as the spiritual and emotional trauma. Preborn is amazing. They do some great work. Preborn.com, folks. If you have to leave us, we hope you have a great rest of the day. We want to hear from you. 610-363-1110. 610-363-1110. We'll be right back.
Where's Mima? We found out Shepard's diagnosis when I was about 17 weeks pregnant. We learned that he was going to need a series of surgeries after he was born in order to give him what they considered a normal life. And we weren't sure how this worked.
Yeah, very emotional, very, very broken. And as my wife just said, not sure how this worked. And called Samaritan, and they said, you just go have that baby. You leave the rest to us.
And just to hear the confidence on the other end of the phone of this is not something that you need to be concerned about at all. You focus on the health of your family, the health of your baby, and we will walk with you every step of the way.
I started investing close to 30 years ago now. All that time, I had never heard anyone talk about setting up your portfolio in a way that glorifies God. When I first heard about it, I was listening to the radio, a show called Financial Issues. They were teaching people how to honor God with their money. That made a lot of sense to me. I guard my heart, my mind. I watch my mouth, hoping to bring glory to God in everything I do and say. But why wouldn't I want to do the same with my money? I decided I wanted my portfolio to glorify God. I became a partner with Financial Issues, and it's been one of the best decisions I've made. I want to leave a legacy of godliness for those who are following in my footsteps. Invest your money in a God-honoring way. Go to financialissues.org.
I want to make a point. No matter what happens, I'll always be there for you.
I know.
610-363-1110. Folks, the markets closed yesterday. Positive territory. The Dow, the S&P, and the NASDAQ were all well above 1 full percentage point, but they've opened this morning slightly down, digesting the latest earnings reports. Actually, as I'm seeing my screen refresh now, the Dow Jones and the S&P are technically above the flat line. The NASDAQ is technically below it, so not a whole lot of movement there. 610-363-1110. Mark, we've got several questions, including one in the chat right now from Brian in Missouri about Berber. Now, Brian was saying, the stock has tanked a lot for him. We also got Tim, who's 73, is a partner. He bought Berber shortly after it hit the buy list, but he's down a pretty large percentage of it and was willing to hold, but has kind of been a dog since he bought it. Mark, what's going on with Berber here?
Yeah, Berber, when that stock has some issues right now. One of the things we're seeing is their earnings. The bottom line is their net earnings dropped over 70% in the last quarter or the quarter before. I can't remember which one, but that alone was enough for people to start pulling back on the stock. But when I dug deeper into it, what I saw was that their retailer relationships, the shelf space that they have, is actually being shrunk for competition space. The retailers are not ordering as much. They're not keeping as much inventory on hand. So that's causing some issues. Now, that could be a short-term thing because BellRing is a big company. They do have some products that seem to be meeting market needs, but for some reason it's declining. My thought on this is that I know it hurts when you buy a stock and it drops 60%. Quite frankly, it makes sense not to stay in it if you don't want to, if you don't believe it's going to turn around fast enough for you. On the long run, I think this stock has potential. On the short run, I really think that we would be holding on to it and not seeing any hope for a while with it. So this would be one of those great stocks for the tax loss harvesting for end of year. If you have all those gains from those good stocks that we had to get out of, like Nvidia and stuff, because of their BRI conflicts, this would be a good time to go ahead and use something like BellRing to sell off, take those losses, offset it, and then when we see the management start turning around this company, we could jump back in the near future. Right now, it's on the hold list. It is not on the buy list. It's on the hold list. There are some things that could happen that would put it on the sell list, but right now we're there on the hold list. But I have no problems if you're uncomfortable with it, selling it, and then later on when if it comes back to a buy, it'd be good. Here's one of the things that kind of sealed it for me on this opinion. When I look at the insider trading on it, when I look at the owners of the company, if they thought they were going to turn this around quickly, they'd be buying the stock at this level. But all I'm seeing is selling a stock from insiders at this point. So that tells me that they think it's going to be a longer turnaround than probably they want the market to know. So based on that, I'd say let's tax loss harvest it, and or if you just want to leave it in there for the long term, the next 5 to 7 to 10 years, that's fine too. Or if you do harvest it for tax loss, go back in and find a stock or two in the buy list. Or, like I said earlier today, you might want to start keeping a little powder dry in case there is a pullback. We need some money to buy into some great deals at that time. All those are good options at this time, and I can't nail down any one of them until we see some clear directions in the market. But I will, when I see that direction, you'll be the first to know.
Yeah, that's awesome, Mark. And I'm even seeing, not only in the chat, but I had this question also. How much of this do you think is related to sleep factor, Mark? If you're willing to ride it out and you're thinking, okay, I'm not getting out of this thing for the next 5 to 7 years, even if the first year or two is real rocky, how much of our sleep factor should we consider also in our decision?
Well, sleep factor is the bottom line.
Yeah,
I mean,
okay.
it's the final. I know it's emotional, but the markets are nothing but emotion. Price doesn't go up or down because a great product or something like that. That influences a great product release, like when a phone company brings out a new phone that does something totally different and cool. Well, that'll cause emotions. And emotions will jump in on those things. And then you see all the phones were doing it. They just had a better marketing campaign or something. But, the markets are emotional. And so sleep factor comes down to two things. And I'm glad you brought that up because we don't emphasize this enough. There's a part of sleep factor that oftentimes we miss as believers. Our Father in heaven is going to tug at our hearts sometimes. Your path may not be the exact path of the asset allocation you have. God may be putting somebody in your path in the near future where you need some money to help that person. Or there may be something in your life where you're going to need some additional funds or something, whether it's health or whether it's emergencies of some kind. We don't know that. All we know is the market and the generalizations of that. But you have a personal relationship with Jesus Christ. If you have all the facts, if you have all the information and you're looking at your portfolio and something still doesn't feel right, you need to be going before God and saying, Lord, help me understand, what is it you're trying to tell me? Is it you're trying to tell me I don't have enough facts? Or you're trying to tell me maybe I need to make my portfolio a little more conservative or a little more aggressive? Please let me know. Get me to that place of peace, because wisdom from above is first peaceful, then gentle, willing to yield. So you need to listen to that. Part of sleep factor may be that, but you won't know if it's from the Lord generally, at least I don't, until after I make sure I have all the information, all the facts, that I could make a good decision. And then that tug in my heart becomes clear. And so like all these facts say the market's going up, but God's telling me to get more conservative. I think I'll go more conservative. Let's go with God, not Mark.
Well said, brother. Appreciate that so much. Folks in the chat, I hope that was helpful for you. Grateful for it. Mark, let's get to a quick one here before the ag report. Stephen is saying, hey, Mark, I'd like to know if now would be a good time to take some profits from our commodities sector ETFs. Maybe roll those profits into dividend-paying equities or fixed income. What do you think, Mark? What should Stephen do?
I think it's a great idea. Anytime the portfolio gets way out of balance, and with precious metals, the term commodities is what has been used here at Financial Issues, and those commodities consist of silver and gold. So precious metals are the bottom line on this, and they've had quite a run. So my guess is your asset allocation is a little bit overweighted in those areas. So why not prune it back? Why not take those money and either increase your cash position like we've been talking about this show, or find some other investments to move into. And hopefully we'll have some more precious metals for you soon, although they're probably going to be overbought for a little bit, but as we've seen this run up. But it's a possibility. You might want to move it from there. The gold and the silver don't pay dividends. They're not really an income fund. So if you're in an income portfolio, you might want to move it into REITs or some high dividend stocks or something like that you're comfortable with. Maybe do a little both, a little more cash and a little more other investments at this time. But yeah, there's nothing wrong with pruning back to your original allocation and going from there. I like that. I like that you're thinking about that. Good job.
Yeah, good stuff, Stephen. 610-363-1110. Folks, I'm sure there's someone out there who's like, you know what, I'd love to call in. I'm a little bit tepid, though. I've never been on a radio show before. Maybe I have been, and I didn't like the way I sounded. Just call in. We'd love to talk to you. Mark's a great guy. Trust me. I know him. I actually know him personally. Mark is a wonderful guy, so call in. 610-363-1110. We'd love to talk to you. We still got time. There's one more segment to go. 610-363-1110. Here's the Ag Report with Craig Haugaard, and then more financial issues on the other side of the break.
This is Craig Haugaard with your Financial Issues Ag Update for October 21st. Corn harvest continues with fairly strong yields, but in many cases, the yields also appear to be running lower than what had been expected. Farmer selling is on the light side as farmers seem to be filling up their on-farm storage. Weekly export inspections were very good at 51.8 million bushels, although we need to average 52.8 million per week to hit the USDA projections. December corn finished today 3/4 of a cent higher at 423 1/4. For soybeans, the main story yesterday was the softened tension between the U.S. and China. Treasury Secretary Besson is saying that new negotiations are going to take place this week in Malaysia. That news, coupled with the largest weekly export inspections report since December of 2024, propelled the market to a higher close. November beans finished the day 12.25 cents higher at 10.31 3/4. The wheat market continues to consolidate around contract lows, looking for any fundamental news that it could find to grab onto that would push it higher. Minneapolis December wheat finished yesterday's session unchanged at 548.5. Kansas City was a penny and a half lower at 490, and Chicago was a penny higher at 504 3/4. Cotton futures seem to have found a bottom, but so far have not been able to really rally off of that level. December futures ended yesterday's session 12 points lower, closing at 64.16. Livestock futures had a mixed performance. December live cattle were $1.82.5 higher at $243.65 per hundredweight. November feeder cattle were 97.5 cents stronger as they closed out the session at $372.67.5 per hundred. Cattle futures were stronger in spite of news that the U.S. may import cattle from Argentina. We had December lean hog futures 30 cents lower, ending the session at $82.07.5 per hundredweight. Class 3 milk futures extended their rally into a third session. Milk production is steady to stronger across much of the country, while cheese production is steady with some areas shutting plants down for seasonal maintenance. We had November futures finishing the session 37 points higher at 17.02. Well, this has been Craig Haugaard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.
In a world where financial decisions can feel overwhelming, it's easy to lose sight of what truly matters: our family, our faith, and our future. With financial issues by our side, we can invest knowing that our financial decisions are in line with our values. Take the first step today and become a financial issues partner to access rich online resources, training tools, and guidance for biblically responsible investing. Head over to financialissues.org and learn how to invest your money in a way that honors God. That's financialissues.org.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
And we're the Gen X.
And we're Samaritan members.
I found out I was pregnant when I was 21 years old. For me, I was scared, I was shaking. They do an ultrasound. And that's when everything changed. When I saw my baby and when I heard her heartbeat, that was it. We've seen the hand of God ever since we stepped into the pregnancy center.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Folks, you still got time. 610-363-1110. 610-363-1110.
And you know, when you call in, actually the question you ask is probably on the mind of thousands and thousands of others. So you'd be doing them a favor by asking that question.
That's right. The brave ones out there. The brave few. Call in. It is a wonderful thing to get to talk to you guys. It's actually, Mark, it's my favorite part of the show is getting to talk with our listeners, get to hear their voice and get to hear your wisdom to their questions. It's so much easier as well to answer those questions because we can hear the inflection in your voice and we can hear, you know, some of the more kind of non-directly verbal cues that are there. So yeah, we'd love to hear from you folks. 610-363-1110. Mark, this next one we have here is from Hollis. Hollis says, "Hey Mark, I have over $450,000 in a deferred compensation account with the school system I retired from that I want to transfer to a conventional IRA in order to use my annual RMDs as QCDs, qualified charitable distributions. I'm a little risk aversive, and all I want is to have the funds to keep up with inflation. Is there anything other than money markets or CDs that you would recommend? We have over $400,000 in other fixed accounts already, and income from 2 pensions as well as Social Security. Hollis is 77. Mark, what would you have for him?
The first thing I'd make sure of is looking at your deferred comp. You didn't say if it was a 457 or a 403B. Most of those will roll over to an IRA, tax-free. It'll roll right in, trustee to trustee. But check with your deferred comp organization before you do it. Make sure. Secondly, yeah, it's a good idea. Roll it over into a rollover IRA, and I love the idea of you using your RMDs for charitable gifts. That's an excellent idea. Where to put it? That question is, especially since you use it. What was the term? Ultra conservative or?
Yeah, risk aversive.
Risk aversive.
Risk aversive, yeah.
Well, that throws up flags and says, okay, this person does not want to participate in the stock market. I may be wrong with that, because if you're in the market, you aren't avoiding risk, you're participating in it. So, you named the 2 basics, the CDs and the money markets. You could get some T-bills, short-term, 3 months, and start laddering them. Maybe take some of that money, and every month for the next 4 or 6 months, just buy short-term T-bills. And actually, I believe at this point, the shorter term, the 30-day, the 1 month T-bills are doing better than, say, the longer term ones. So you might want to just stick with the shorter terms and just be buying into them into your brokerage account along with your CDs and your money market, and keep it conservative, like you said, because you'll keep up with inflation. Then when you start doing your RMDs, or you're already doing it because you're 77, but you can convert that. Actually, you can do up to 100,000, I believe, into by using the QCD process. And what an awesome thing that you're using your RMDs to hopefully care for others and to promote the kingdom. Yeah. Praise God.
That's awesome.
And thanks for your question.
For sure. Hey, Mark, I have a follow-up question with that. Hollis was asking about some of those more safe investments. You and I were talking about this before the show, actually. Would some of the Timothy plan more safe options, maybe some of those fixed income options, would they be a possibility as well? And I apologize if you had mentioned Timothy plan.
I did not mention that because my brain went to ultra conservative.
Right. Okay.
But the Timothy plan fixed income, if you're okay with it, there's a little more risk when you start buying other things besides T-bills. In fact, even buying government long-term treasuries would be more risky. So you want to be careful with that. There is a ETF called BIL that is all T-bills that you could use. But also the Timothy plan, if you just want to just bring up a little bit, maybe even increase the income from it, you might want to use the Timothy plan fixed income fund, and put some of that in there. You'd be diverse across all sorts of stuff, including T-bills and other government, and some corporates as well. So it wouldn't add that much risk to your portfolio. Might help it with the income. So good catch there.
Yeah, absolutely. Hollis, thanks for the question. That's good. Mark, we have Michelle next. Michelle is from Louisiana. She says, hey, Mark, I'm having trouble with the asset allocation models, actually. I don't know how to access the models within certain age groups. I have the old models from back in 2022 with different age groups printed out, but I want dated models for different age groups. So for context, Mark, and for our audience, back in the day, we used to have asset allocation models that were explicitly age separated. So you had a 25 to 35 model, for example, a 45 to 55 model. The models are different now. We just have the 3 models, growth, and income. Mark, how would you help Michelle, though?
Yeah, the idea of age dated is for one general topic, and that's retirement. But you don't always just invest for retirement. So the age dated cause as much confusion for everybody who wasn't looking at, okay, now I'm 45 and I got 20 years to retirement, or now I'm 59 and I only have 5 years to retirement, that kind of thing, which portfolio should it be in? So the idea of changing it to just the risk factor, where we have income, we have growth in income, and we have growth. Now, those three, for retirement purposes, could be broken down. Where you have the income for those people who are at retirement, where you have the growth in income, who are those people from 45 to 65, and then you have the growth for those that are younger. That's one way you could use it. I hope that made sense on that. But also you can use it for, some people are in retirement, but they don't need this money, and they want to leave it for their children, or for their children's children, or for their church, or whatever, and they just want to see it grow. So in those situations, they would use the growth, even though they might be 85. They're still in a growth mode for those assets, because they don't need them. So it can work all different ways by not designating it by age group. But I understand what you're saying, and it makes total sense. So if you would look at it again, if you're already retired, you want to be, and you just want to protect the assets you have, you'd use the income mode for the least volatility in an investment portfolio. For those who are approaching retirement, you want a little bit more safety. You'd use the growth in income. And for those who are young enough to be riding two white horses down the road and going for it, you'd use the growth.
That's great, Mark. Thank you. Alan is 78. He's asking, hey, Mark, my question is in reference to my son, age 33. He might be one of those that you just mentioned, Mark, with the two white horses.
There you go.
That's right. Says, I just got him started in investing in several, using the FISM principles about 3 to 4 years ago. He's using Fidelity, and I advised him to purchase several Timothy Plan ETFs, just a little each month, and he's got about 12,000 shares of each of these. These shares are split between a Roth account and his personal individual account. He also has a Roth with his employer. He needs to diversify, and I want to ask, which areas should he start? What do you think?
Which areas should he start to diversify in? Well, obviously, I would get. It sounds like the high dividend is a great portfolio, but there's other Timothy Plan funds that I would use still at this time until you get up to the $50,000 or $100,000 portfolio level. You might want to be looking into one of the funds I've loved for many, many years is the Israeli fund. It's a mutual fund. It's not an ETF, so it's a little bit different than the ETFs you're used to using. But that might be something to be looking at. And if not that, definitely the international fund, the ETF, the TP, I think it's TPIF. ETF from Timothy Plan, that'll diversify you around the world then, and help get some diversification there, but also investing in different parts of the world where, if you think about all the investments in the world, there's a lot of investments out there you're missing on just staying in the United States. So you might want to do that. And it doesn't sound like you're in, or maybe you are in the TPLC. I think you said something like TPHC, which I'm not sure. Yeah, I'm thinking that should be TPLC.
TPLC, yeah.
Yeah. So if you're already into that, that's great. So look into the mutual funds as well as the ETFs in your Fidelity portfolio to use those. And that way you're getting these buckets of gobs of stock in each bucket, so your diversification is staying out there. Also take a look at the growth portfolio in the Partners Hub and the asset allocation there, and it'll list all these different areas and things. Go to the funds one, not the individual stocks. But I also, if I were you, I would just, if you have the time, take a moment and look at the regular FISM portfolios, not the fund portfolio. And that way you can see some of the stocks. And maybe you want to start dabbling a little bit there, maybe find a favorite stock over there somewhere and put a little bit into that. I always think it's great to be invested in things that you're passionate about. So instead of just a broad brush with individual or with ETFs and mutual funds, you could find one or two stocks. And I wouldn't go crazy at this time because your portfolio won't allow you to fulfill it totally, I don't believe, otherwise.
Yeah, that's helpful, brother.
Yeah, so with that said, stick with BRI funds. Don't go anywhere else because you want to invest with biblical integrity. You want to honor God in all you do. And we want you to honor God in all you do because that's why we're here. Financial Issues is here to honor God in all you do, including your investments. And we have all you partners and all you wonderful investors who have decided to do the same thing, to honor God with your investments. We thank you for being here and we thank you for your desire to do so. God bless everyone.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.